Welcome back to the channel. If you are new to my channel, please subscribe, please like this video, and then share the video with your friends and your loved ones who wants to learn how to trade forex profitably. This is another part of our SMC trading, and we are looking at market structure today. Now, what is market structure? You've been hearing a lot about market structure. Market structure is simply about what? Going in the right direction. You want to be going in the right direction. So as a trader or as a retail trader, you want to be going up if the market is going up, and you want to be going down if the market is going down. So market structure is simply what? The behavior of the market. What does the market does? Just like we have human structure. Sometimes you see, let me say, oh, the structure of this lady is very nice, or they call it stature. Okay, so you can see that the stature or the structure of something is just what makes the thing unique, or what is different about the thing. That's just the structure of it. That's my structure. That's the building's structure. It means what features makes the building unique. That's just what structure does. Okay, so in market or in currency trading, in forex trading, market structure is simply what? The behavior of the market as it is moving. Is it moving in an uptrend? And what do you see to know that the market is moving in an uptrend? Is it moving in a downtrend? And what do you see to know the market is moving in a downtrend? And is it not moving? And what do you have to see to know that the market is not moving? That's simply what market structure does. And in trading, we have three types of market structure. And the first type of market structure is what? Is the uptrend market structure. The uptrend market structure does, what the uptrend market structure does is, it breaks structure to the upside. Okay, it is moving up. Market that is moving up, a bullish market. Okay, and what does it do? It breaks structure to the upside. So it creates what we call a higher high and a higher low. What is a higher high? It will create a high and then come back to break that same high again to create another higher high, a high that is higher than the previous high, and it will create a low that is higher than the previous low. Okay, it will create a low that is higher than the low that was created initially, and it will keep doing that. Okay, so it will create a high, it will come and break that high to create another higher high, create a low, come and then respect that low or maintain that low and create a higher low. It will also break the high that is created, create another higher high, and also maintain the low. So what it does is what? It creates higher highs. It creates higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So it breaks the structures of the previous highs. So this is the previous high. With this high, it is broken. Another higher high is formed. This low is higher than this low. That's a higher low. This high is higher than this high. That's a higher high. And this low is higher than this low. That's a higher low. So as a trader, you want to be buying if the market is going up. Okay. So let me show you with a real chart example. So as you can see from here, this Euro USD on a 15-minute time frame, and it's obvious that the market is what? Is creating a what? A higher high, higher low, higher high, higher low, higher high, higher low, higher high, and it continues like that. Okay, so once you see this kind of market structure, or once you see this kind of futures, you should know that the market is going what? Is going up, and it continues like that. Okay, it continues like that. And what does it do? It breaks what? Structures to the what? To the downside. Okay, it will break structure, to break structure, to break structure, and it continues like that. So that's an uptrend market futures. So as a trader, what you want to be doing is what? You want to be buying in this kind of market condition. You want to only look for what? For buy opportunities. You don't want to be selling as the market is going up, because you always get stopped out. You always lose money. So you want to be buying as the market is going up. Another type of market structure that we want to look at is the downtrend market structure, or the bearish market structure. This type of market is a market that is going down. It shows that the sellers are in control, or sellers are dominating the market. So you want to be selling along with what? The sellers. So what the market does is it creates what we call a lower low and a lower high. So it will create a low, and create a high, but it will break the previous low that was created to create another lower low, and it will maintain the high that was created. Then it will break the previous low to create another lower low, and it will maintain the high that was created. So it breaks the lows to to the downside and maintains the what? The highs. So it breaks the structures to the downside and maintains the previous highs. That is what we call a downtrend market structure. It creates what we call lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So once you see any market and the market shows lower lows, lower highs, lower lows, lower highs, you just know that the market is going down and you want to be selling. You just want to be looking for an opportunity to sell, and that's all you are looking for. You don't want to be buying in a downtrend, and you don't want to be selling in an uptrend. Let me show you a real chart example. So as you can see from the charts, this is Euro USD chart, and you can see that on a 15 minutes time frame, what is the market doing? The market is breaking what? Structures to the downside. It is creating what? A lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and it continues like that. So as a trader, you want to be selling in this kind of market. Okay, so as it is breaking the lows, you can see that as it is breaking the lows to the downside like this, you see it is breaking. You can see like this, it is breaking the structure to the downside. As you can see, it is breaking structure to the downside. As you can see, you see, we are breaking structure to the downside. We are breaking structure to the downside. We are breaking structure to the downside. So as a trader, you want to be selling in this kind of what? Market. You don't want to be buying when the market is going down. Okay, that's a bearish market structure or a downtrend market structure. The last type of market structure we want to look at is what? Is the range or the consolidation or the sideways market. Just as the name suggests, it doesn't have any clear direction. Okay, it fails to break structures to the downside and to the upside continually. Okay, let's say it will create a high, it will break a high, and you are waiting for it to break another high, and it will fail and then come and break the low. So you don't even know where the market is going. As it looks like it's going up, it will turn and start going down. As it looks like it's going down, it will turn and start going up. So it doesn't have a clear direction, and sometimes it creates equal highs and equal lows. Okay, it creates equal highs and equal lows. That's what a ranging market structure does. And as a trader, you want to stay away from such market structure. Okay, let me show you real chart examples of the range market structure. So as you can see this chart, this from this point, okay, from this point up to until this point, it's clear that the market doesn't have a clear direction. You don't even know where the market is going. Okay, from high to low to high to low to high to low to high to low. You don't even know where the market is going. It is ranging, or it is moving sideways, or it is what? Resting, or it is consolidating until they finally broke it to the downside. Okay, this is a range market. In this kind of market condition, you want to stay away, because if you buy here and it comes down to stop you, if you sell here and it comes up to stop you, so the only thing to do is what? Just stay away from this kind of market structure. This kind of market structure makes a lot of traders to lose or give back their profit back to the market, because most traders don't know when to stop trading. When the market starts ranging, they still want to be trading when the market is ranging. But as an SMC trader, you want to stay away if the market is ranging. Okay, and there are a lot of examples about this. You can also see from here to this point, it's ranging. You don't know where it is going. Okay, this is what? A high, a lower high, a higher low. This is a lower high. What do we have here? A higher high, a lower high, a higher high, a lower low, a higher low. It's just, you don't even understand what the market is doing. It's just messy. So you want to stay away from this kind of market conditions. Okay, so this is ranging market structure, and you need to stay away from this kind of market conditions. So please, this is how market structure works. And as a trader, if you understand it better, I will encourage you to watch the video more than once, so that you get the idea very, very, very well. So that when you are trading, you'll be able to spot them, and you know when to trade and when to stay away. Please subscribe to the channel, and I'll see you in the next one.